Okay, good evening, ladies and gentlemen. It's Trap King, and San Diego says the time is 2 p.m. Whoa, it's afternoon in San Diego, so I'm just like 8 hours ahead of people in San Diego. Wow, 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 wow. All right, thank you very much for being on Zoom today, everybody. And today, rather tonight, what I'm trying to do, what I want to do tonight is I want to just talk about traps a bit, and then I'll give you guys a glimpse of the indicator, and I'll talk about the trap rules also. All right, so it's not going to be a long Zoom call. It's not going to be a long Zoom. So I just want everybody to stay put, stay focused, listen to everything I want to say, okay, because I want to teach you guys traps. Now, what is a trap? Should we start from there? Okay, 1 second. So before we talk about traps, before I tell you what is a trap? What I'm going to do is first things first. I'm going to go to the rules. I'm going to read it out. Okay. So first, what are we looking for? So this is what we're looking for. So I'm going to have my bullish candles as green. Oh, my bullish candles are going to be green. So let me see. Okay, good, perfect. So my bullish candles are going to be green. My bullish candle green, another bullish candle green, and then I'm going to have a bearish candle, which is going to be black. All right, so what am I looking out for? Now, I'm looking for an engulfing candle that engulfs a minimum of 2 candles to the left. An engulfing candle that engulfs a minimum of 2 candles to the left. So, in other words, what are we looking for first? We want to see an engulfing candle first. Okay. Now, in this case, we have an engulfing candle here, right here. So we have an engulfing candle here. Now, I don't know how to do this. Okay, let me do something like this so that we'll just assume that we have wicks also. So I'm going to put wicks here. I'm going to put this wick. I'm going to do something like this. Okay, good. So we have something like this. So what we do is we take a horizontal line and you put at the opening price of this bearish engulfing candle, and then you take another one, and then you put at the closing price. Now it's a bearish candle. I mean, the opening price is up, the closing price is down, right? So that's what we're doing. The first thing we're going to do. Okay, now I haven't done that. Okay, the next step is you want to make sure, because I mean, you're looking to the left and you want to be sure that a minimum of 2 candles to the left, they opened and closed within these 2 horizontal lines here that I drew here, not one opening, not like how will I do this? 1 second. Not like this, something like this. If it's something like this, it doesn't meet the criteria. Okay, why? Because you see this line here, this, it did not engulf this one also within its closing price. So I want to see if it stops here, I mean, it's fine. But you want to make sure that when you draw this line, it should engulf a minimum of 2 candles to its left. Now, having done that, the next thing you want to do as a Forex, as trap trader, is you want to make sure that this whole trap, this whole engulfing candle is a minimum of 18 pips. That's what you want to make sure. Now, the moment you see that is a minimum of 18 pips, okay, what you do next is you take out a box and you box up this reference candle here from week to week. So like this, like this, like this, like this. So all right, good, perfect. So we said do that. Okay, good. So you're gonna do something like you're gonna do this. Now all you're waiting for is you're waiting for the market to break out and close. Now I'm going to take away this Or let me just leave it there first. Now let me take it away. Let me take it away. Let me take it away. So what you want to see is, now let's say your next candle is something like this. Let's assume this is your next candle. Assuming this is your next candle. Uh-oh, what did I do? 1 second. Was that the proper green I used? No, I used this green. All right, perfect. So let's assume that this is your next candle here. Now, what you're waiting for is you want to see the market break out of this zone, either to the upside or to the downside. In this case, the scenario I'm printing here is it breaks to the upside. And when I mean break to the upside, I mean break and close, not something like this. And then the market does, what's it called? And then the market does this. That's not what I'm looking for. The market goes through a week and came back and closed into this zone. That's not what I'm looking for. What I want to see is I want to see the market break out of this zone and close. The moment the market breaks out of this zone and closes, okay, what we have is the market is telling us that, ladies and gentlemen, we are in a buy scenario. Now, because we're in a buy scenario, what I'm going to do is I'm going to pull out my Fibonacci and I'm going to draw it on this whole zone here. See how I draw it? On this whole zone here. So I am extending my, let me draw it again so that everybody's going to follow, so everybody can see it. All right, so I'm going to draw it again so that everybody can see it. Okay, 1 second, 1 second, 1 second, 1 second. All right, so you're going to draw out your Fibonacci. Can you guys hear me loud and clear? I want to be sure you guys can hear me loud and clear. Can you guys hear me?
I can hear you. I can hear you.
All right, perfect. Let's go. So now what you want to do is you take out your Fibonacci and then you will come to the breakout point and then you put your crosshair there, just the way you want to draw Fib, and then you will extend it to the other end of the box. Now, all you're waiting for is you want to see the market come and retest this box in this zone and then go all the way up here. When this happens, your first entry is going to be here. I'm taking you guys to the very basics. Your first entry is going to be here. Your final entry is going to be between the 50 and the 0.62. This is going to be your final entry right there. That's your final entry right there. Your first take profit, your take profit one is going to be at 1.5 here, and then your final target is going to be here, after which you want to close out. Now your stop loss is going to be right here. I'm teaching to the very basics, 2 to 5 pips below this zone here. 2 to 5 pips below this zone here. That is where your stop loss is going to be. Now, excuse me. Now that your stop loss is there, what you will do is I can conveniently take away this Fibonacci now. Now, what happens next? We don't know. But then let's say the market does this and comes back down like this. Or the market does this and comes to, like, let's say, something like this. I'm going to change this to black. I'm going to extend it all the way here, right? And then the market does this. Let's say the market does this. So what it means is that the market has come and picked your first entry and then your second entry, and then what you will be expecting as a trader is you want to see the market from here go up. Now, it doesn't have to be one candle. It can be multiple candles that it will use to make this move. It could be multiple candles. It could be just one candle. All right. So this is a typical example of what a trap should look like. Now, what happens is when the market gets to your first take profit here, let's assume this is what the market did, stops here. Okay. Let's assume the market did this. Let's assume this is what they did. Let's assume this is what the market did. Now the market has come from here, hit your take profit one. What you want to do next is you want to take this, move your stop loss to break even. And then you want to take some money off the table. And then you want to see how far the market is going to go. That is what you want to do as a trader. All right. And then the market could essentially do this and then move all the way up to your take profit two. And then the moment you smash your take profit two, you are out of the trade. Does that make sense? Does that make sense, guys?
Yes, sir. Yes, sir.
All right, perfect. So I'm gonna do this. Now we're gonna face the sell side. Now we're gonna face the sell side. We're gonna face the sell side. Let's face the sell side. Okay, so I'm gonna take this away. I'm gonna take this away. I'm gonna take this away. Now let's assume that what the market gave you instead in this particular scenario was something like this. And then this candle was something like this. So I'm gonna change this. Let me change this to what's it called? Black. I'm gonna change this to black because that's bearish. Okay, and then I could leave this as green. I could leave this as green like this. I could just do something like this. Let's assume this is what they gave us here, like this, and hold on to the downside. Let me take this one. Let me extend this one to the downside also. And then in this case, what we have is we had just a wick like this, something like this. Now we don't have a wick to the downside. So let's assume that this is what we have, right? Just like we did in the other scenario, what we will do here is the same thing. The same thing. Take out your vertical lines. This is a bullish candle. Put it beneath. Now you take out another one. And then you put it above. Opening price, close price. Look to the left. It should engulf a minimum of 2 candles. I just did a minimum of 2 candles. 1, 2. So this is that I don't care about. This is not important to me. 1, 2. That is it. Now that we have this, now that we have something like this, right? Good. So like what we did the first time, you measure the whole stone. Is it up to 18? Oh, yes, it is. Next step. Take out a box up your reference candle. Box up your reference candle. Box up your reference candle week to week. And then once you box it up, all you're waiting for is you want to see the market breakout. Now, let's say the market does this. Let's say this is what the market does. Just like in the first scenario, let's assume this is what the market does. And then the market does this. And then let's say the market now does this. We don't have any breakout. We're still in this zone. We want to see a break and close. But then again, Let's say the market now does this. The moment this happens, we have a breakout. This is a breakout, a break and close. At this point, you will pull out your Fibonacci again. Now, the first scenario, we had a buy. And then, like I said, you are going to draw. Now we're having a sell scenario. But I said, you're going to draw your Fibonacci from, you're going to take your crosshair from your breakout point. That's your breakout point, and extend it to the other end of the box. That's it. Again, where's your first entry? Your first entry is going to be at your breakout point because we want to sell. That's your first entry. Your second entry is going to be between the 50 and the 0.62. That's right here. That is going to be your second entry. And then that's your final entry, as a matter of fact. First target, 1.5. Final target, here. 1 second, I want to get some water to drink. 1 second. Stay with me.
Did he say what kind of time frame these candles were at or would be at?
See, use pretty much everything on the hour when it comes to traps, but don't take me for sure on that. But that's just what I noticed.
Okay, thanks. Maybe I'll ask when he gets back.
For sure, dude.
All right, pardon me. Thank you for waiting. Thank you for staying put. I'm back.
I had asked the question when we were out. Are these candles generally hourly?
What did you say?
What time frame would these candles?
All right, I'm actually playing with the 1 hour time frame. Okay, I like the 1 hour time frame the most because it's like the most consistent. Not as if the other ones do not work, but I mean, I want the money right now. I don't want to stay. I know it takes 4 hours to make a 4-hour candle. I'm not that patient. I want the market to give me a 1 hour candle quickly, and then once it breaks and we move. Okay, let me tell you a quick story. So while I was testing this strategy before I brought it out 2 years ago, I brought it out in 2019 February. While I was testing this strategy, what eventually made me to conclude that I would like to stick on the 1 hour was, then I tested a couple of pairs, and then I decided to test EUR AUD. So while I was back testing EUR AUD on the 4 hour time frame, I noticed that the candle that I marked up, it took about 2 weeks to give about 80 to 100 pips. I don't remember how many was the total pip count was on that particular trap. It took about, I mean, the higher the time frame, the higher the pips. So it took about 80 to 100 pips, I think, thereabout. 2 weeks for that trap to completely play out and give me those pip count. But then when I went lower to the 1 hour time frame, within that same period that trap formed, I saw numerous traps that I could buy, sell. And when I counted the total pip I could get off of those 1 hour move, I could get as much as 2 times what or 3 times what that 4 hour zone gave me in 2 weeks. Does that make sense?
Yeah, it does.
So that's why I decided to stick to the 1 hour, because I mean, I want to get my money right now and get out.
When you're doing this on your typical trade time frame, then like in and out.
Yeah, 1 hour time frame, get my money, get out. Okay.
Well, but the candles are 1 hour candles, right? So
yeah.
As far as the setup and trading through the whole setup, about how long would that take?
For the whole setup, that's once the breakout happens, right? Are you there?
Yep.
You mean once the breakout happens, how long is it going to take for it to completely play out?
Yeah, to play the whole trap out. How many
All right.
hours?
Now, in some cases, okay, it takes like how am I going to explain this? It doesn't take, if you take one, for instance, let's say you take a trap like the London, for instance, you take it in the morning before the London kicks in. Okay, by New York, by the end of New York session, depending on how large that trap is, okay, that trap is supposed to have played out. Now, the longest I have stayed in a trap, in a 1 hour trap, for it to completely play out, the longest I have stayed was, I think, about a week. And I think that was Bitcoin. I stayed there because it was a very huge trap. So I stayed that long. But normally it takes about 24 hours and it's done. Provided you know the time frame, the market, you know the market is going to make the move. And sometimes when the market wants to make that move, it's very swift. It just does it like 1 hour and gives you everything and you get out. After keeping you there for as much as 8-9 hours, but then in 1 hour, it just makes the whole move. Is that okay?
Yeah, that's helpful. And so do you need to be like worrying about getting out before the New York close or anything like that?
No. All right. The rules are once if the trap is still, I mean, if the trap has not hit any of your targets, you're still in the trade. You don't care. Whatever happens, forget about it. As long as this market hasn't played out to hit this your first target here, even if New York closed and the market is still ranging in all of these zones, forget about it. Until it hits this target, then that is when you know that, okay, fine, I can now decide to move my stops to break even. And obviously, I'm now risk free. I've taken some money off the table. I forget about the move. I forget about that trap totally. I'm done with it. Because what's the worst that can happen? It can hit me out at break even, or the market could continue going down and hit my final targets. But the bottom line is I'm in a risk free trade. Is that okay?
That's great. Thanks for explaining that.
All right, perfect. So guys, so having explained this, again, you have this. Again, you have this. So just don't bother yourself as regards all the illustrations I'm giving here. I'm going to go into the charts and we're going to see it very soon. Okay, so let's say the market does this. That's broken out, and then the market gives us something like this. You could easily do it. They do it a lot. They do it a lot, and then I mean, the market plays out. So this is a typical example of what I'm expecting. Now, my stop loss in this particular trap setup, let me do something like this. Let's assume this one has a wick to the upside to somewhere here. Let's assume that's the wick this one had. This. So my stop loss is going to be higher than this wick here. Not just higher than this one, but higher than this wick. Because chances that this market could easily throw a wick and come all the way back here and then continue to the downside. It could easily do that. They do it a lot. I hope that makes sense before we go into the chart. Does that make sense, guys? Does that make sense?
It makes sense. Then it'll blow your stops, right?
What did you say?
Well, if the wick goes flying up like that, it can blow your stops out.
Exactly. So you want to give some room for the market to breathe. Okay, so I'm going to take this off and then we're going to go quick into the chart and then we're going to see what I'm here for. All right, so okay, I'm going to get rid of all this things. Get out of here, get out of here, get out of here, you get out of here, you get out of here, out. And the beauty of what we're doing now is we have an indicator. All right, we have an indicator. The indicator, the link to how you could get the indicator is going to be dropped in the chat shortly. All right, so just it's going to be dropped in the chat shortly. So before it's dropped, let me just focus here so that everybody's on the same page. All right, good. So now I'm going to put on my indicator right now, or rather, before I put on my indicator. Now, what we are having is we don't have any of those kind of scenarios right now. But then if I play, let me take this. If I play, so, typical example, here, how many pips is this? Oh, perfect. Perfect, perfect. Right there in front of us. Right there in front of us. So, typical example, what I just explained right now. Example. So, again, like I said, this is a bearish engulfing candle. You do this. You do this again beneath. Why you're doing that is because you want to know if it truly engulfed more than one candle. So you engulfed 1, 2. Well, okay. So again, what do? You measure this you measure this whole zone. Ooh, Trap King is 28 pips. Oh, I just needed a minimum of 18. So he gave me 28 pips. I'm good. So now that I'm good, what do I do next? I bring out the box and I box up this candle, this reference candle. I box it all up week to week.
Did you just say that you have a minimum of 18 pips on these?
Yeah, I want the candle to be a minimum of, the zone to be a minimum of 18 pips.
Thanks.
All right, so now that I've done that, okay, what I want to see now is somebody talk to me. In this case, did this market break to the up or the downside? What are we expecting for this market right now? Are we expecting to buy or are we expecting to sell? From my explanations so far.
Sell?
We're expecting to sell.
All right, perfect. We're expecting a sell. All right, good. Now that we're expecting a sell, okay, like I said, you pull out your Fibonacci, and then you're going to draw a Fibonacci from your breakout point, and you extend it to the other end of this box here. When you do that, one second. I want to quickly do some. 1 second. Okay. Still with me, just a second. Just be looking at my screen. All right, good. So now, like I explained earlier, your first entry ordinarily is supposed to be here. I'm trying to give you as simple as I can give you. This is just the basic rules. Your final entry is going to be between the 50 and the 0.62 right here. Excuse me. All right, your first target is going to be down here. Your final target is going to be down here. And then your stop loss is going to be all the way up here. That is 2 to 5 pips above this zone, depending on how volatile that pair is. But I mean, you're looking at this wick to this side here, so it wants to be higher. So I literally take this away right now, this Fibonacci. Now that I'm taking the Fibonacci away, now the market has broken out to the downside. It has picked your first entry, it has picked your second entry. But now listen to this part. What I like to do is my second entry, the beauty about me I like to take my trades from the second entry. So my second entry, if I take the trade from the second entry, I have a risk to reward of I have a risk to reward of, what is it? I have a risk to reward of 1:2. I mean, 1:2 for the first target. And then the final target, I'm going to have a risk to reward of something very similar to 1:3, slightly, what's it called? Slightly close to 1:3. Slightly close to 1:3. I mean, I'm risking all of this to get all of this. Okay, so I mean, if the market comes to your first target, it's a risk reward of already 1:2, and then if it comes down, yes, approximately 1:3. As against if I want to take from my first, as against if I want to take from only what's it called, from just this zone, from the first entry. The first entry, I'm only having a risk to reward of, it's not even going to make too much of sense, because the risk to reward here is for it to hit your first target, your risk to reward is 2. You're risking 2 is 1. Then I mean what I'm saying is 1:0.5, then 1:1. That is why I like the second entry. Does that make sense? Does that make sense what I just said?
Yeah, correct. Yes.
All right, good. So because the game of risk to reward, you want to work properly. If it's not worth it, then why in the world are you going to take that trade? All right, so that's it. So again, I'm going to hit the play. Now you can see the.
You say you don't trade the first entry, then you just trade the second entry.
I rarely trade the first entry. I rarely do, except I'm looking at another kind of pattern, or I'm seeing some other thing on the lower time frame, and I'm like, okay, this market is going to move from here. But if I'm trading based off of just traps, I rarely go to the first entry. Rarely do. Okay, so play. You see what I talked about in terms of that week. Look at that week. The market came here, and it has come to hit your first target right here. In this case, what you move your stop loss to break even. You have secured 1:2 already. 1:2 approximately. So move your stop loss to break even. Guess what the market did? The market came back here and hit you at a break even. The moment the market hit you at a break even, you're done with that setup. Forget about it, because you had taken some money off the table at take profit 1. Forget about it and let the market continue playing. Forget about it. So look at what the market eventually did. So the market eventually did this, eventually made the move this way, but you had already taken something. So now, if I take away this, if I have to bring up my indicator, or before I bring up my indicator, we have another trap here, right here. What did I do in the first case? I came here like this, and then like this. What do you want? You want it to engulf a minimum of 2 candles. So it has 1, 2, in this case, 3 candles. Now, this whole week makes it very funny, but does it qualify? Yes, it does. Will I take it? Maybe, maybe not. Okay. There's a reason why this week is here. This is a rejection. There's so many. What they did here, why this week came down here, is because they wanted to kill so many people, and they have blown so many accounts by this week just coming down here. They blew so many accounts down here and going back up. That's all they did. So chances of the market coming down here were very slim, coming back. So now, let me now bring up my indicator. I'm not going to bring up the indicator. Now, look at the indicator. As you can see, what I did here in this first trap here, you see this highlighted in yellow, and then with a dot above it, that is your reference candle. That is your trap. And if you can see, if I take away this box, all of these things here, 1, I take away this. Now, what the market tells me is this line here is your breakout point. Obviously, should be your first entry, which I will rarely take. And then your second entry is going to be between these two green lines. Now, obviously, by the time you get the indicator, you can actually edit all of this if you choose to. You can actually edit this colors to however you want it. Okay. And then if you look up here, you see these two lines here. Okay. These two lines are like, they represent the top of the highest candle. One at the top of the reference candle, and the other one is the top of the highest candle out of this 1, 2, 3 candles here. This whole, what it created here. So obviously your stop loss is going to be slightly above it, like I explained, slightly above it to give room for spread. Now your first target is going to be this line here, and your final target is going to be this line right here. You see what you see it just there? It did it. The market, it presented it for us. Now, as you look at this arrow here, this arrow tells me that this is my breakout candle. This arrow here tells me that this is my breakout candle. And then all of this. Okay? Does that make sense?
It makes sense. What indicator is that?
Good. Don't worry, you have access to it, but just hold on. All right. Once I'm done, I'll tell you guys how you can gain access to it. All right. Is that okay?
Sounds good.
All right. Perfect. Good. So now look at this again. Another one. It puts a dot above. It tells me that this is my reference candle. Now you're not just going to, because I mean it's an indicator. You're not just going to jump. Oh, the indicator gave me this. I'm going to just jump in and all that. You need to understand the rules, and that is why I took out time to explain those rules for you. I just gave you the basics. I took out time to explain them to you so that you can understand, so that when the indicator starts doing all of those things, you know which and which not to take. Okay, which to take and which not to take. All right, so now, again, your reference candle. I'm going to select play. Let me get rid of this line here. And let me get rid of this line here. So I'm going to hit the play. Play. Stop. Now, as you can see, came down, did all this. Did this candle close like this? I don't know. Let's find out. Stop. So the market closed like that. Oh, beautiful. I like this. Now look at it again. It pointed an arrow here telling me that this is my breakout candle. So if I even drew a box here, you already know the breakout candle. You have already seen it from this box I drew here. You see this is your breakout candle. But without this box, the indicator tells you that, yo, Trap King, this is your breakout candle here. So you see it. And then the moment this breakout happens, automatically all these lines appear. Now, this is the entry I would like. In this case, can anybody tell me, are we expecting to buy or sell?
You're going to buy.
Perfect. Good. So in this case, I'm expecting this. This is where I want the market to come to here. All right. Now your stop loss, you see this? This one here tells me that that's the low of this reference candle. But if you look at here, it tells me that this week here, I need to pay attention to this week right here. All right. So I have to take account. I have to account for this week. If I am going to take this straight setup, it means I'm going to have a very huge stop loss. Okay. But then what happens next? Let's see. So I pointed out a sell to you here, and now I'm pointing out a buy to you again. So let me take away this. You see what I'm talking about? Now this is what I'm talking about. You see how long the market stayed in this zone, and we're like, oh man, this market is not moving. Now check. Let me put my what's it called? Let me put my period separator so that everybody could see it. Appearance, session break. Good. Now, you see this? It formed in the previous day. This is a new day. Look at what happened. A new day. You see all this? Now, for the guy that asked, I think the person that asked that question was what's that name? I saw the name of the person that asked. I think it's Levi. Levi, I guess you're the one that asked that question. All right. Levi, you're the one that asked that question. All right, good. So now look at here. Look at where you entered the trade. The trade picked you up before a new day came. You're not bothered. You're not even interested. You have picked your position, set your pending orders based off of proper risk management. And then what are you waiting for? Let's see. See that? Now, don't get carried away. This did not hit your take profit one. So we're still in this trade. Can I make it up? Tell me I can't make it up. Right in front of, right in your faces. Look at this. All the way up. Look at that. The market came here during New York session. That's when he made this move. During New York session that day. He made that move during New York session that day. All right. So the market hits your target. But then guess what again? This is why you need to understand the rules. Now the market gave me this again. That this should be my trap. But I'm not going to take it. Can somebody ask me why? Somebody ask me to take this one.
Okay, why? Maybe because it's the candle
Give it a shot. Give it a shot. I want to hear what you want to say.
it was the candle that hit your target.
Perfect. Perfect. Who gave me that answer? Royalty, right? Perfect. Yeah. Perfect. Somebody's paying attention. That is the only reason why I'm not taking this, because this was a candle that hit my target. So this is like is a continuation of all this. I mean, it's not, that's why this is the beta version of the indicator. It's not meant to give me this dot here. It's not meant to give me this. It's not meant to give me this. So, having done that, let's see. Let's see if you did not understand the rules and you took that trade. Let's see what would have happened. Would you have made money? Let's see. Would you have, oh no, you wouldn't have made money. Nope, you wouldn't have made money. You wouldn't have. That's not part of the rules. That's not part of the rules. I mean, this, you wouldn't have taken this one, but this one you would have taken. All right. So, do we have any questions? Okay, before I take questions, somebody asked about the indicator. Now, somebody asked about the indicator. Now, in the chart, I'm going to drop it again. So if you look at the chart, I think I just dropped it again. Did I? I'm not sure I did. The market maker is messing up my screen. All right, good. Did I drop it again? Let's see. Hold on, let me drop it again. Let me drop it. Let me see if I did the right things. Okay, good. I've dropped it. So you see that link? I've dropped it in the chat. So if you want to request, if you want to have the indicator, all you need to do is to apply for it there. It's absolutely free. Okay, it's a beta version. I want you guys to have a feel of it and test it out and see if you can enjoy it. It's absolutely free. You're not paying for it. It costs to get it done, but we're not paying for anything. Okay, it's absolutely free. So have a feel of it. You're going to have access to it for, I don't know, I'm going to have to ask. I don't know how many days. I think it's about a month. I'm not sure. I'm not sure about that particular information. But you could play around with it. Okay. So do we have any questions?
Yeah. Hello. Hello.
Yep, I'm here.
All right. Does the indicator, does it automatically scan all pairs, or you have to apply it, load it on each pair?
I mean, just like if you look to my top left here, I have the indicator here. If I do this up here, if I put it here like this, any pair you go on the chart, it's there. Any pair. So this is this is GJ. This is GJ. Let me look at another pair. This is GJ. Let me look at another one. Let's look at UCAD. See it? It's there again. Do you see that? It's there again. Let's look at AUD USD. Is it there? Oh, yes, it's there. Let's look at all of it. Ooh, it's there. Now, I like EUR USD. I like EUR USD. I'm liking EUR USD. I want EUR. If USD comes here, I'm most likely going to get an opportunity to sell the market down. I like EUR USD. I like it. I like what the market is doing here. What the market wants to do is wants to play with us. I like the whole consolidation is giving us here. So EUR USD could easily come all the way up here through a week and then continue down. That's what I want to see on EU. All right, so that's EU there. It's there. It happens on every pair. And I think somebody was asking if it happens on crypto. Yes, it does. It's there. Yes, it does. Crypto. It's on crypto. It is on crypto. Okay, before I forget, let me show you guys something. Before I forget, I don't want. Thank God we're still here. Before I forget, now check this. This is some final nuggets for you guys. You guys listening? Are you ready for it? This is some final nugget for you guys. No, it's not. Astri is asking if it's the same amount of pips for indices. No, it's not. I'm going to tell you the pip count. Now for indices, okay, listen to the pip count. For Forex pairs, the pip count is 18 pips. That's for Forex pair and gold. Is 18 pips. 4, minimum of 18 pips. For indices, US 30, it's a minimum of 800 pips. For NASDAQ, NAS 100 is a minimum of 300 pips. S&P 500, a minimum of 100 pips. Bitcoin, a minimum of 100 pips. Ripple, a minimum of 50 pips. Ethereum, it's a minimum of 40 pips. Now, I haven't tested on Dogecoin. I mean, Dogecoin just came in. I've not tested on Dogecoin, but I just decided to give you the pip count of all those pairs. So you can easily know, okay, it meets my criteria, it didn't meet my criteria, and all of that. Okay. So finally, Astra, have I been able to attend to your question? Astra, are you good? All right, perfect. So, all right, now, I wanted to give you guys a final nugget before we hop off this call. Now, check this out. Levi, are you there?
Yeah, I'm here. Yeah.
Good. Now, check this out, royalty. Now, you see this one here? You see this one right here? You see this one right here? This right here. Now, let's assume that the market did this. Came and hit your first entry here, and then the market did this, never came to your second entry, and then the market from here, the market shot all the way up to take profit. If the market did that, okay, it means that you are completely done with this trap. You don't need the order you had sitting here at entry 2, you are going to completely delete it because you are no longer meant to be interested. The trap is complete. If you leave it, chances of this market coming to blow past and going to your stop loss is extremely high. Is that okay?
All right.
That makes sense?
Yeah.
Makes sense.
Makes sense. Perfect. Good. Again. Okay, I just explain again. Another information. Now, in all this, let's assume that this particular candle here, okay, did this, came all the way from here, came all the way down, came all the way down to the bottom of this candle here. what that has done is, I'm sorry, I don't know where the noise is coming from. It's kind of loud in that environment. Please, okay, thank you. All right, good. So if this is what the market did, the market gave you a bearish move here. Okay. What this market has automatically done is this bearish move has engulfed all of this, including this initial zone. Therefore, you will pay attention to this larger trap, this larger zone. Does that make sense?
So if you were playing the initial engulfing, playing the initial trap, you would abandon it and
Yeah, exactly.
reset up with the new bigger candle.
Exactly. Immediately the market does something like this for me, I close out. And I wait for this bigger one. Or I mean, I could easily say, okay, fine. I mean, I calculated my risk. So I could just hope that this market could pull back and come to my entry here and I get out. And I wait for this one to give me a proper breakout. Is that clear?
Yeah.
Is that clear? All right, perfect. So guys, since I do not have any questions and I've been able to answer as many questions as I could answer, all right, I'm expecting this to be out there. I'm expecting this the recording of this Zoom call to be out. And once it's out, okay, it's going to be shared on all the platforms so that everybody, wherever, I don't know if Angel is on this call. Can we please drop the Discord link for that's the free Discord for no risk. If we could drop it for the people, that would be nice, so that everybody can hop on. So that I know I have everybody in one place, and everybody can ask me questions in one place. Because if I leave you guys on Telegram, you may not know. Okay, you could come and you ask me a question. Obviously, if you ask me a question on Telegram, I'll respond. That's me. I'll respond, even if I may not see it on time. But once I see it, I will definitely respond. So if you look at the chat, that something has been dropped. There's a link there that has been dropped. You can click it and join our Discord channel, our free Discord channel, where you have our links. We drop links for live Zoom trading every day of the week, and then you could get information like this. And then we'll also drop the recording of this Zoom. But please do not hesitate to apply for the trap indicator so that it's given to you, and then you can play around with it. And then obviously, if you have any questions along the line, you can ask me. Okay. I hope we understand. Is everybody good tonight? Everybody tonight?
I got a question
All right,
too.
perfect.
You got a minute?
I got a few questions.
All right, what?
First one I have is
hold on. What I'm gonna do first is I'm gonna close the recording so that it doesn't get too long. Then I'll take your questions. Is that okay?
perfect.
All right, perfect. All right, so I'll stop the